All right, so we were just talking about that huge move from the lows back in April. I want to ask you, when you're talking to clients, I imagine you're getting quite a few calls. Is this a sustainable trend or is this a tradable bounce? What are you telling your clients?
Well, Frank, your earlier point comparing this market to 2020, I think, is very apropos. Whether you call it a V-shaped recovery, really for our clients, retail clients in general, I think have participated in this rally. Institutional investors, not so much, but I do believe that given the news that we saw come out on Monday related to China, that we could see the equity markets continue to rally into the summer. And I do think that the S&P 500 will test its all-time high of 6147. So I think we end the year higher from where we are today. But over the medium term, there's still downside risk because we have not yet seen the damage to the economy related to tariffs and the uncertainty that's played out. So I think over the medium term, investors still need to look at the potential for revisions downward on earnings per share growth and on GDP. But in the short term, I think there's more upside, and I still believe we're in a secular bull market.
Yeah, to your point, that GDP report, I believe it comes up on May the 29th. A lot of people watching that, looking at the S&P, just about 4% away from its all-time high. So one area I know that you're looking at are the chips, and we're going to show just the move when it comes to chip, a pretty dramatic move from the April lows, up about 45% or so since then. Is that a sustainable trend in your mind? Do you think the chips not only sustain that growth, but really continue to lead the markets?
It's amazing, really, Frank, when you see the bounce we've had since April. I do think that semis will continue to lead the market higher, and I think that rally is sustainable, particularly the note you just read as it relates to Saudi Arabia. That is a big deal for NVIDIA, AMD, and really a shift in Washington policy to allow these companies. Previously, they had to have special U.S. licenses to sell to the Middle East. So I believe that the administration will continue to use companies like NVIDIA and semis as a bargaining chip because all of these countries want access. And semis, again, if you're in a secular bull market, the leadership has to remain intact. So I believe that tech will continue to rally and semis still have more room to go.
All right. So how are you viewing the market more broadly? Also, the idea of Fed cuts. The CPI report, did it change your view when it comes to Fed cuts or not after we got that temporary tariff reduction between the U.S. and China? When you look at the Fed funds rate, you look at the CME Fed Watch tool, the odds of that July cut that so many people were banking on, it was reduced pretty significantly. I'm looking right now. A week ago, it was at 57%. Now it's at about 34%. Does the Fed matter in this market right now? Are you concerned about the outlook when it comes to Fed cuts at all?
I'm not concerned about the outlook. I think that the news that came out on Monday allows the Fed to take a breath and really to continue their wait and see pattern. So now the market's pricing in the first rate cut in September at 25 basis points and 2 rate cuts this year. Again, I think that we know that the Fed has been backward looking and they're continuing to monitor data. So I don't think that, I think that the fact that this is being pushed back because recession fears have declined and investor sentiment is better is a very positive thing.